the Chinese renminbi, to my mind, is a structural repricing story. I think while near term, of course, there are certain concerns about consolidation potentially in the dollar view, as kind of the U.S. fiscal outlook has obviously materially changed since the blue sweep which has taken place. But I think the renminbi in itself, I think, is a structurally a strong story. You just talked about the trade balance numbers. I mean, it's interesting. I mean, Chinese trade balance numbers are hitting record surpluses at the same time as US's trade numbers are hitting record wides on the deficit side. I think the basic balance story in China is extremely robust. I think obviously underlying driven by very strong current account numbers, but also buffered by very strong portfolio inflows. Last year, the total bond inflows into China were almost double the amount they were in 2019, and far surpassing what one would have expected simply by way of inclusion of China into the various bond indices. We suspect this year we are going to see an even more robust increase in those numbers coming through. Equity flows into China are increasing as well. So I think the overall sort of balance of payments picture for China extremely strong, but also then supported by the fact that to the extent that the official policy focus is increasingly shifting towards capital account liberalization, I think there is a policy bias inherently towards a stable to stronger currency, which I think there will be a lot more permissive towards letting this currency strength play itself through.
Yeah. You're targeting the renminbi to hit 6.2, but I'm trying to see whether PBOC is really comfortable with the yuan at these levels at a time when exports will be hurt because we are seeing lockdowns in Europe and the US, and that would hurt demand for Chinese goods.
So look, I mean, I think central bank views about currency valuation are always tempered by what is the pace of that move going through. So I think what obviously becomes very critical here is what happens to the broader dollar. What also matters is how quickly we actually reprice the currency. But overall, I would argue that whilst with some sensitivity to the trade-weighted value of the renminbi, the broader impact of the currency on export competitiveness should not necessarily be a concern. In fact, even from a valuation perspective, the renminbi on our model, especially the longer-term structural models, is not necessarily particularly expensive. I mean, it is not any longer cheap, but it's not by any means at any kind of levels which are stretched enough for policymakers to get particularly concerned. Neither necessarily is positioning, and which is why we think this broader structural story kind of permits. The central bank would be sensitive to how quickly it repaces. We also think they will use this opportunity to potentially also move to next stages of liberalizing the capital account, including permitting more domestic flow of capital to outside of China's borders. But overall, I think the direction of travel remains towards a stronger currency.